Hi everyone, Shaun Humphries here. Welcome to this edition of the All Things Retirement Podcast. Well, if you're a business owner, you'll enjoy this podcast. Our guest today is Thomas Holmes, CPA. Thomas has worked extensively with business owners over the years. Today we're going to talk about a topic that is of keen interest to most business owners, and that's the whole area of determining the mix of salary, dividends, and bonuses each year, as well as taking a look at income splitting opportunities with family members. So again, if you're a business owner looking for some ideas around this topic, you'll enjoy this edition of the All Things Retirement Podcast. Hi everyone, Shaun Humphries here. Welcome to this edition of the All Things Retirement Podcast. In this edition of the podcast, we have Thomas Holmes joining us today, CPA and CA, to give us some tax planning tips for incorporated professionals and business people. Thomas, thank you for joining us today.
Thanks for having me, Shaun.
The topic we wanted to tackle today is, what tends to be, I think, a very last-minute kind of exercise for a lot of self-employed professionals, and that's sort of determining the income allocation. At the end of the year, you're looking at how much do I take out as salary income and dividend income, and I think layered on to that is the whole notion of income splitting. We do have some income splitting opportunities from bona fide employment work done by family members, but there might be some other ways that we can get income out of the corporation to family other than salary. So maybe you can share with me a typical situation you've seen with business owners in terms of how they handle this area, maybe not best practices, and what best practice looks like in terms of determining the kind of mix between various sources of income. We'll start first of all just with the yearly distribution of income.
Okay, absolutely. First of all, I agree with you 100%, Shaun. Often this is done very last minute and very off-the-cuff planning in a lot of situations. I think when dealing with whether to take salary or dividends, it's very case-specific and depends a lot on the facts in place. But I think the important thing is to ensure that business owner is having a conversation with their planner and with their accountant to make sure that it's meeting their needs. From a high level, we will see salaries. Salaries can be more beneficial because they provide a tax deduction to the corporation. So depending on what the corporation's income is for the year, a salary will provide an immediate tax deduction in the corp.
Okay.
Dividends, on the other hand, do not provide a tax deduction inside the corporation. Because of this, salaries are actually taxed at a higher rate. Here in Manitoba, for example, salaries are taxed at 50.4% at the top rate, while non-eligible dividends are taxed at 45.69% at the top rate.
Okay.
So in situations where a corporation doesn't necessarily need the deduction for the year, perhaps it has an off year with losses, dividends may be the most tax-efficient way to get that cash into your hands personally.
Okay.
Another thing that's important to point out is from a retirement perspective, dividends do not contribute to RSP contribution room, and they do not allow you to contribute to CPP or even to individual pension plans. And so what we'll often see as a mix is for those business owners that want to ensure that they have an RSP contribution room or want to be able to contribute to their IPP long term, we'll see them take a mixture of salaries and dividends. So potentially they'll take enough salary to maximize their RSP contribution room, and then for anything above that, they'll take dividends since they're taxed at a preferable rate.
Okay, perfect. Now, so what happens typically for business owners? I guess they'll kind of take their draws through the year, and then when they're closing out their year end or doing their allocation for income for tax purposes, it's at that point typically that they'll start doing the allocation. They'll sit down with someone like you or their accountant or financial planner to work out that optimized mix between salary and dividends.
Absolutely, yeah. Okay. And then at that point they'll determine whether it would make sense to declare a bonus, which is like a salary, in order to get a large corporate deduction, or whether, once again, if the corporation doesn't necessarily need that deduction, they pay a dividend instead. Okay.
Now, just one thing on the bonus / salary. You said they're sort of synonymous. Are they completely synonymous? Do you have to make CPP deductions against bonus?
Yeah.
So how are they technically different? You said they're pretty much the same, but what are the differences?
It depends. I mean, I guess when we think about salary, we think of the ongoing regular interval payments that are made throughout the year, which have regular withholdings.
Okay.
Bonuses are allowed to be I guess the CRA provides some leeway, and so that you have until the end of February in order to declare that bonus for the corporation, and so it allows you to do a little bit of retroactive tax planning in the sense that after your accountant has looked at your statements, and done your preliminary tax return, they could say, okay, let's declare a bonus in order to get that extra deduction.
Capture all that income. Yeah,
absolutely. The important thing to remember is that you can't just write that down on a piece of paper. You have to make sure that bonus is actually paid within 180 days of year end. Otherwise, you can run into some pretty ugly tax consequences.
Okay, great advice. Now let's kind of move from the mix between salary, bonus, and dividends, and how each are sort of handled from a deduction standpoint within the corporation, and talk about income splitting. So can you give us a high-level review on, if my spouse is working for my corporation, what level of, can I just pay my spouse whatever I want, or are there some general guidelines? What's your perspective on that?
The easiest rule of thumb for salaries, because we'll look at salaries first, is salaries have to be reasonable, quote unquote. And what they mean by that is, what would you have paid an individual to do that same person if they were unrelated to you?
Okay.
And so you can't get away with paying your 16-year-old son $100,000 a year to file papers once a week. It has to be a reasonable salary. And so if the CRA ever challenged a salary, you'd have to be able to justify that is what you would have paid somebody off the street to do that exact same work. Dividends, on the other hand, do not have to be reasonable. And so what we'll often see is a business owner introduce their spouse and adult children. I should make that clear: adult children as shareholders of the corporation, and then they could flow out dividends to those individuals at any amount they choose. Dividends do not have to be reasonable.
Okay, great. Thomas, thanks so much for unpacking for us today the whole salary, dividend, bonus mix and income splitting opportunities for small business owners.
My pleasure. Thanks for having me, Shaun.
Well, I hope you enjoyed this podcast. I think Thomas did a great job of unpacking some of the key points to be mindful of when it comes to looking at salaries, dividends, bonuses, and income splitting opportunities with family members if you are self-employed or have a corporate structure where you can take advantage of some of these opportunities. We've developed a powerful process called Game Plan. It's a retirement income planning process that also includes very specialized modules for business owners. We have the great luxury of having Thomas consult on the game plan process. So if you are a business owner beginning to think about retirement and you want clarity on how to really integrate your corporate situation to your personal planning for retirement, then Game Plan could be for you. Feel free to visit our website at www.shaunhumphries.com for more information about retirement and other aspects of wealth planning, as well as getting more information about the Game Plan process. Feel free to contact our office at 204-977-8022. And of course, email information is on the show notes for this particular podcast. Wishing you all the best as you pursue your financial planning and wealth planning goals.